Hello, very good morning to all, and welcome back to today's daily dose of market insights. And welcome back to a brand new trading week, which is Monday, the 14th of July. So I hope that you guys have a restful weekend. I'm Kelvin here. Very good morning. Welcome to today's daily dose. Today will be Monday, 14th of July, 2025. So before we kickstart our daily dose of market insights, as usual, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so so before we kickstart the gist of today's daily dose of market insights, which is the usual intraday technical outlook on the four major US dollar pair, the major US stock indices, and as well as the two key commodities market, which is gold XAU/USD and the West Texas crude oil. Let's have a recap what has taken shape on Friday over the weekend, and as well as in today's early Asia session in terms of the news flow, economic data release, and their respective impact on the intraday movement on these broad-based cross-asset classes. So let's start with last Friday movement on the major US stock indices. So last Friday movement on the major US stock indices, it continues to trade in a rather sideways lethargic fashion. So the SPX ended last Friday in the red, down by negative 0.23%. The Nasdaq 100 also down by negative 0.21%. The Dow Jones and the Russell 2000 underperformed with a loss of negative 0.6%, and the Russell 2000, which comprises of the small cap US companies, was the worst performer on last Friday, down negative 1.26%. So if you could recall last Friday, in my intraday technical outlook, I do have a bearish bias on the Nasdaq 100 due to that negative technical configuration, and as well as a bearish bias as well on the SPX 500, where it can't break above the fresh all-time high at the 6,290 level. So indeed, price action continues to face this kind of short-term lethargic movement. Number one, because of momentum factors in the very short term is not supporting a continuation of the bullish impulsive up move. So there could be a risk of a minor corrective decline taking shape on the SPX 500 or the i.e. the US major stock indices. And as well as we do have this policy uncertainty surrounding the implementation of the US trade tariffs. So what do I mean by this? So we know that Trump last week issued a series of love letter, I would say that tariffs demand letter across major US trading partners, threatening to actually increase some of the earlier announced reciprocal tariffs that was announced in Liberation Day, that means 2nd of April, and to actually continue his aggressive demure or aggressive rhetoric, hoping that major US trading partners will adhere to US terms and conditions. So on this Saturday, means i.e. 2 days ago, Trump actually made this aggressive stance on EU trading partners. All right, so still recall that last week there was some news was saying that EU is about more or less coming to the tail end of this multi-week long of trade negotiation with the US trade officials. Say that they're more or less iron out some kind of deal and hopefully to announce by the end of last week. But however, things doesn't turn out rosy as expected, so there appears to be some hiccups along the way, and Trump over the weekend threatens a 30% tariffs on EU and as well as Mexico by the 1st of August new deadline, all right, to take effect of 1st August if better terms are not negotiated. So this 30% tariffs is actually more than the reciprocal tariffs earlier that is being announced by Trump on the 2nd of April. 2nd of April, so that was thinking about 20%. So due to this tariffs ultimatums by Trump, they actually create a negative feedback loop into the major US stock indices, even on the trading behavior on the US S&P E-mini and the Nasdaq 100 E-mini futures as we are speaking right now. So based on the E-mini futures that is trading in today's Asia session, because don't forget the futures market of the S&P 500 and the futures market of the Nasdaq 100 is traded on Goblex. That means they are actually open right now for trading even during the Asia hours. So both of them are actually down by negative 0.5% each. So the E-mini is down by negative 0.5%, followed by the Nasdaq 100 E-mini futures as well. So not too rosy, I would say, at the start of the week. And let's take a look at Asia, right? So Asia also not too bad for Asia. So if you look at Asia over here, the Nikkei 225 is down by negative 0.25%, not a really a big magnitude. And the Hang Seng indices almost unchanged right now as we are speaking. So the Hang Seng is almost unchanged at negative 0.04%. The higher beta Hang Seng Tech Index, which comprises of the China big tech stock, is up positive 0.10%, and even the China H shares benchmark, that means i.e. China stock listed on the Hong Kong exchange, as being determined by this HSCEI benchmark of China H shares, is up by 0.2% over here. And even the China mainland CSI 300 index benchmark index is up by 0.32%. And over the rest of other Asia benchmark indices, we start to see the KOSPI 200, which is also up by, which is the South Korea benchmark index, up by 0.3%. And the TAIEX is not that, TAIEX pretty bad because TAIEX is down by negative 0.7%. And interestingly, the safe haven play, which is the Singapore Straits Times index, is up by 0.22%, which is, I think this is the on track for a sixth consecutive session of fresh all-time high, as it's now trying to approach the psychological 4,100 level again, which it did on last Friday, but can't break above it. And also later I'll share you one due to also some positive news flow coming out from STI, that's coming out from the Singapore, that is supporting this ongoing bullish movement on the Straits Times index over here. Okay, so let's take a look at the FX market over here. So the FX market continues to trade in a kind of a K-shaped pattern. So what you could see over here is that the dollar continues to strengthen against the other major currency. So based on the 5-day rolling performance of the dollar against major currency as of now, we are speaking 14th of July, the dollar right now is the strongest against the sterling and against the yen. So the dollar sterling is up by 0.96, which is 1%. The dollar yen is up by 0.9%, much more higher than the US dollar index, which is up by 0.6% based on the 5-day rolling performance basis. But however, the dollar continues to remain lackluster against the Aussie, down by negative 1% as we are speaking. So basically what we are seeing right now is that a kind of K-shaped performance in the FX market. The dollar is strengthening against the sterling, against the yen, in some form against the euro as well, but not so much against the Aussie dollar due to a positive momentum technical factor, which I highlighted on last Friday. So later I'll touch on the so-called the intraday technical movement on the Aussie dollar, and also last week, the Aussie dollar strength against the US dollar is also being supported by a less dovish RBA monetary policy stance as well, because they didn't actually reduce interest rate as expected, right? So that causes this positive movement on the Aussie dollar. Okay, so now one thing I want to share with you all interestingly is will be gold. So for gold price over here, what we could see is price action of gold on last Friday managed to shape a gain of 0.95% in light of this trade tariffs policy implementation uncertainty coming out from the White House, and there's some kind of safe haven demand coming back into gold after gold lagged behind in the last 3 weeks or so. Right, so what we could see go over here is that last Friday it hit a 3-week high at the 3,360 level, which is a minor range resistance that has been in place since late June or 24th of June this year. So in today's Asia session, it attempt to actually break above it intraday high is at 3,374. All right, we have an intraday high of 3,374, and right now it's trading back down again at 3,356, almost the unchanged mark. So what I could see over here is that if it continues to have a push up and have a daily close by the end of today's US session at 3,360, potentially it could revisit the 3,343 level in first step, which is the minor swing high of 6th of June and 16th of June this year. So one thing for sure, the technical situation seems to has improved for gold after that 1% increase on last Friday, and that 1% increase enable gold to actually trade above the 20-day moving average and the 50-day moving average. And right now it's trying to probe the 3,360 intermediate resistance level, where the bulls need to have a daily close above it to gain more traction. So later I'll touch on more about the key levels to watch out for on the intraday basis for today for gold XAU/USD. So now let's take a look at the economic calendar for data that has been released this morning over here. So this morning there are some China data to actually take note of, which is the balance of trade as well as Singapore GDP growth. So let's talk about Singapore GDP growth first. So this is the flash estimate for Q2, which is just give me a minute. Sorry, it's hit the hang. Come on. Yeah. Okay, so this is the flash estimate for Q2. So if you recall in Q1 estimate, Q1 GDP data, the Singapore economy actually contracted to negative 0.5% on the Q1Q basis, and in this quarter, the quarter that just passed, which is Q2, the flash data came up better than expected and recovered to a 1.4% annualized quarter-on-quarter growth, and it also came in better than analyst we call it market expectation of 0.7%. So that kind of push up the STI index as well. Both fundamental and momentum data both supporting this ongoing medium-term bullish trend in the Singapore Straits Times Index. And over in China, what we could see the balance of trade data. So despite this, we call it trade tariffs that US implemented on China, do not forget, yes, even though there's some trade tariffs, we call it a deal that could be up and coming from China, but there is still tariffs that is being slapped on China exports heading into US, which is at 30%. But despite that, overall export year-on-year growth for the month of June continues to turn out much more robust than expected. So 5.8% year-on-year, better than what market is expecting at 5%, and also above the previous May figure of 4.8%. So there's still pockets of external growth for China. All right, so that also kind of supported the Hang Seng Index this morning. Like I share with you all, because if you look at the Hang Seng indices, it's now trading at still the unchanged mark over here, despite the negative price action momentum that is being seen on the S&P 500 and the Nasdaq 100 E-mini futures as we are speaking right now. So both of them are still down by 0.4%. All right, as we are speaking. Okay, so that's the first segment of today's daily dose. And do not forget, this week we have a very important week as well for US quarterly earnings. So this week, it will be the unofficial start of Q2 earnings reporting season in the US, kicking start from the US banks. So the US banks will kickstart their earnings result not today, will be on Tuesday, 15th of July, before the US market open on Tuesday, starting with the JP Morgan, BlackRock, Citigroup, and Wells Fargo. So we'll touch more about that when we cover our daily dose segment tomorrow. So without further ado, now let us now jump straight into the second segment of today's daily dose, which is the intraday technical outlook on those broad-based cross-asset classes that we cover on a daily basis. So let me expand my screen so that you guys can have a better view of the charts. All right, so let's start with the FX market over here. Right, so over at the FX market, let us hit off with the euro dollar first. All right, so the euro dollar on last Friday, we continue our intraday bearish buyer stance, which price action continues to remain below our short-term pivotal resistance level, and also below this minor descending trend line that is confluencing at 117.30 as well from the minor high of 1st of July over here. All right, So no change. First support level to watch out for will be today. First resistance level to watch out for will be today's Asia session. Friday. Pardon me. Today's Asia session high, which is at 116.94 level. 117.30 will still be my short-term pivotal resistance level to maintain our intraday bearish bias for this continuation of this minor corrective decline sequence to unfold on the euro dollar. Two near-term support level to watch, pardon me, will be 116.30 followed by 115.80, which is also confluence with the medium-term ascending channel that is still in play from from the 13th of May 2025 swing low. Only a bullish breakout and the hourly close above 1730, 11730 short-term pivotal resistance that will invalidate today's intraday bearish bias view for that minor corrective decline sequence and flip the owners back to the bulls for the next intermediate resistance to come in at 11770, pardon me, followed by the 11810, 11825 level, which is the minor swing high of 1st of July before this ongoing minor corrective decline kick-started. Okay, that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar was actually much more underperformed than the euro dollar at its have already pierced below the 20-day moving average, whereas the euro dollar still continues to hold above the 20-day moving average. So with that, it's now already hitting our first support zone, which is at 134.90, 134.70. So I will tighten my short-term pivotal resistance level to last Friday European session high at 135.45. So still maintain our bearish intraday bias for this ongoing minor corrective decline sequence to continue on the sterling dollar using a tightened short-term pivotal resistance for today at 135.45. A breakdown below 134.70 exposes the next intermediate support at 133.75, which is the minor swing low at 23rd of June, and that also confluence very closely to the medium-term ascending channel support, a lower boundary from 13th of Jan 2025 low. Only a bullish breakout and an hourly close above 135.45 will invalidate today's intraday bearish bias to see a squeeze up to revisit the 20-day moving average at, I think, as an intermediate resistance at 135.80. Only a breakout above 135.80 will increase the odds of a potential recovery on the sterling dollar to expose 136.35 next near-term resistance level and 136.60, 136.70, 136.90, which is the minor swing high area of 4th of June, July. Right, and the congestion and the former minor swing low of 30th of June. So this is kind of a congestion area at 136.70, 136.90. Right, so that's for the sterling dollar. Still maintain our intraday bearish bias view for this potential ongoing minor corrective decline sequence to play out using a tighten short-term pivotal resistance for today at 135.45 on the sterling dollar. Next up will be the Asia Pacific currency against the dollar. So the Aussie dollar seems to be now trapping in a minor sideways range configuration after that bullish breakout and a retest of 65.40, which is coming very close to the 20-day moving average. So given that the dollar strength could be seen in the so-called European currency, which I explained earlier or highlighted earlier, that's the euro and the sterling dollar. I would have a more of a neutrality stance for today, as it may try to trade sideways between the 66 figure level, which is the 11th of November 2024 swing high. That price action can break out after the bullish breakout on last Thursday over here last Thursday. Okay, can't break above 66 figure level, so neutral between this 66 figure level, the upper limit, and the lower limit will be 65.40. So it's more like a sideways range between 66 figure and 65.40. Only a surprise breakout above 66 figure level will resume the bullish impulsive up move sequence of the Aussie dollar to expose the next intermediate resistance zone at 66.30/66.45. We also confluence with the 0.764 Fibo extension taken from the low of 23rd of June. Right, so that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen continues to actually trade in a minor uptrend sequence within a medium term sideways range configuration. So with that, if I were to could draw a minor ascending channel that is seems to be taking form from the 1st of July low over here. Okay, so this is the minor ascending channel. Okay, that's to be taking form. So with that, first support level to watch will be the channel support, and as well as today's Asia session low. Okay, very close over here at the 146.81. So I'll be using a slightly lower level, which is last Friday first support level at 145.55. So using a slightly tightened short-term pivotal support level 145.55, maintain our intraday bullish bias for the dollar yen to squeeze up towards the upper limit of that medium-term sideways range configuration at 148 figure level. Above it sees 14860 slash 149 figure level. All right, so that's all confluence with the upper limit of this ongoing minor ascending channel that is evolving from the low of 1st of July. Only a bearish breakdown and an hourly close below 145.55, 145.55 short-term pivotal support level that would invalidate today's intraday bullish bias to see a minor corrective decline, floating back to the lower part of the medium-term sideways range configuration. In first step, exposing the next intermediate support at 145.85, which is the minor swing low area of 10th of July, and below it exposes 145.10, which confluence with the rising 20-day moving average. All right, so that's for the dollar yen, and also sum up the intraday technical outlook on the major FX dollar pair. So now let us proceed with the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 last Friday hit our first resistance level, can't break out and shape that pullback as expected. And this pullback managed to help exactly at our tightened short-term pivotal support that we highlighted on last Friday, 24,050. Oops, where is it? Right, so, okay, so let me put it back again. So for sure, 24,050 is indeed a pivotal short-term support after a challenge of it in today's Asia session opening, right, which is at the 9 a.m. mark. And also the hourly RSI has started to stage a bounce of the 50 level mark as well. Okay, there's a higher low and stage a bounce and inch back up towards the 50 level mark, so indicating that bullish momentum has started to resurface at least on a intraday basis. So with that, no change, still maintain our intraday bullish bias, but with two lower level intermediate resistance level to watch, given that it's only an intraday technical outlook view. So the next intermediate, the first intermediate resistance will be this 24,270, which is the meeting line of these two bearish Marubozu hourly candlestick that is being flashed out on last Friday 2 p.m. the 2 p.m. hour mark Singapore time, and 3 p.m. hour mark last Friday Singapore time, the meeting line between these two Marubozu candlestick. So that will be 24,270. All right. So that will be the first resistance level to watch, and followed by the next intermediate resistance will be at 24,490, which was last Friday minor swing high and confluencing with 25th of June minor swing high. All right, so still maintaining that intraday bullish bias using 24,050 as a short-term pivotal support level. Two intermediate resistance, 24,270 followed by 24,490. However, if price action start to have a bearish breakdown and the hourly close below 24,050, today's intraday bullish bias will be negated to see a further slide down to retest 23,690, which is the minor swing low area of 4th of June and 7th of July, and also confluence with the rising 50-day moving average, and as well as the minor ascending channel from the low of 2nd of June. So if price action float down to 23,690, I'll be still looking out for potential bullish, we call it candlestick pattern to form, because price action is still trading above the 50-day moving average and the medium term, the minor ascending channel support from 2nd of June 2025 low. So that also indicates that the medium term uptrend hasn't been violated yet. All right, so that's for the Hong Kong 33. Next up will be the Germany 30. So Germany 30 last Friday, we do have a bullish bias on at this 24,170 short-term pivotal support, where we expect a recovery to take shape. So the recovery did bounce on last Friday US session, but thereafter it's just to trade sideways. And today's Asia session, there's a gap down. So with this gap down over here, and also the negative news flow where Trump threatened with a 30% higher tariff on EU exports heading into US due to the lack of headway that is being made in the ongoing negotiation between US and EU. That kind of be negated whatever bullish sentiment that we are expecting to come in on last Friday. So with that, and also the hourly RSI is in the oversold level, but it is not flashing out a bullish divergence, all right, over here. So with this negative price action that is being seen right now on the German 30, I have no conviction that it could recover at this juncture. So at this point in time, there could still be a potential residual bearish movement within this medium-term uptrend phase that is still intact as price action continue to trade above the 50 and the 20-day moving average. So with a rather tight short-term pivotal resistance for today, which is the gap down, okay, at 24,170 / 24,220. That will be my short-term pivotal resistance zone on the Germany 30. Flip back to a bearish bias for the potential residual corrective decline movement to take hold. First support level to watch will be 23,950, which is the medium-term I would say that minor ascending channel support from 20th of June 2025 low. A breakdown below it exposes 23,815, which confluence with the 20-day and the 50-day moving average. However, a price action managed to do a bullish reversal and the hourly close above 24,220, then the bulls potentially could be back on the Germany 30 that invalidate the bearish bias for that residual corrective decline sequence to continue and see a potential recovery in first step towards the next intermediate resistance at 24,320 before 24, then thereafter 24,520. Okay, that's for the Germany 30, flipping to a intraday bearish bias using a tightened short-term pivotal resistance zone at using a tight pivotal resistance zone at 24,170 / 24,220. Next up will be the major US stock indices, starting with the US Wall Street 30 over here. So the US Wall Street 30 broke down below this hourly RSI former parallel ascending trend line over here, and it hasn't hit the oversold level yet. All right, so there's a bearish momentum breakdown as being depicted by the hourly RSI momentum indicator by the break of this former parallel ascending trend line support. We tested it on last Friday before inching down lower, and the RSI hasn't hit the oversold region. So that is representing a bearish momentum, at least in the short term, that has started to resurface on the US Wall Street 30. So despite the fact that it is now testing our lower neutrality limit, so on last Friday we flipped to a neutrality stance between 4485 and 44170, but given the bearish observation that I explained to you all earlier as being depicted on the hourly RSI at this juncture, we will now flip back to a bearish bias stance on the US Wall Street 30 using that is representing the Dow Jones Industrial Average, pardon me. So short-term pivotal resistance level will be this level here. Okay, which is last Friday high at 44,450. 44,450. Okay, so this will be my next resistance level. I'll put it in red. And this will be the support level, first support level in green. Okay, so let me tidy it up. Okay, so flip to a intraday bearish bias stance on the US Wall Street 30, representing the Dow Jones Industrial Average using 44,450 as my short-term pivotal resistance level. A breakdown below 44,170 increase the odds of this bearish bias for the minor corrective decline sequence to unfold, exposing the next intermediate support zone at 43,800/43,600, which is the rising 20-day moving average. However, a price action managed to do a U-turn and a bullish breakout with an hourly close above 44,450. Today's intraday bearish bias view will be invalidated to see a squeeze up to retest 44,850 again. So only a breakout above 44,850 will increase the odds of the start of a new impulsive upmove sequence, targeting in first step the current all-time high level at 45,100 that is printed in December last year. Above it sees 45,455/45,520 next in the first step that is being defined by a Fibo extension cluster levels. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 managed to inch downwards below our 6,290 pivotal resistance that we highlighted on last Friday as well. So still no change, continue to maintain that intraday bearish bias, and also given that the RSI managed to retest that former parallel ascending trendline support, now turns to the pullback resistance and continues to inch downwards and hasn't hit the oversold level yet. So with that, no change in terms of the key levels to watch. So 6,000. Okay, so first support level, first resistance level to watch will be the gap down over here, right? There's this gap down in the Asia session at 6,257 or 6,260 to round up. So 6,260 will be my first resistance level to watch. The gap resistance that's being formed in today's Asia session. Only a bearish breakdown and hourly close below 6,220, then I would shift my pivotal resistance level to 6,260. So for now, still maintain at 6,290. Below 6,220 exposes 6,180 slash followed by 6,136 next. 136 next, which is conferencing with the rising 20-day moving average as well, as this potential ongoing minor corrective decline phase unfolds on the SPX 500. However, if price action did a U-turn and a bullish breakout and an hourly close above 6,290, then today's intraday bearish bias view will be invalidated to see the continuation of the bullish impulsive upmove sequence, exposing the next near-term resistance zone at 6,330/6,355, followed by 6,370/6,380, all defined by Fibo extension clustering levels. Lastly will be the Nasdaq 100. So the Nasdaq 100 also continues to inch lower below our 22,920 short-term pivotal resistance that got rejected on Thursday and as well as last Wednesday. So this is indeed a key resistance level to watch to maintain our intraday bearish bias view on the Nasdaq 100 for that potential minor corrective decline phase unfold. So far, it hasn't broken down below 22,600, 22,510 intermediate support level that we highlighted on last Friday. So we do have a first resistance level to watch, which is the gap resistance that's being formed in today's Asia session at 22,770. So unless we have a hourly close and a breakdown below 22,510, I could tighten my short-term pivotal resistance to 22,710. So for now, still maintain our short-term pivotal resistance at 22,920. A breakdown below 22,510 exposes the next intermediate resistance zone. It exposes the next intermediate support zone, at 22,360, followed by 22,235, which correspond to the rising 20-day moving average. However, if we have a price action bullish breakout above an hourly close above 22,920 pivotal resistance, that would invalidate today's intraday bearish bias view to continue the bullish impulsive upmove sequence for the Nasdaq 100, exposing the next intermediate resistance at 23,190, followed by 23,400/23,480, which are defined by Fibo extension clustering levels. Okay, so that's for the Nasdaq 100. All right, so that's also sum up the intraday technical outlook for all the major stock indices. So now let us move towards our commodities market, which is starting with gold XAU/USD. So for gold XAU/USD, price action is now trying to flirt above the 3,060 level intraday. So today it did a bullish breakout, try to retest retest at this level. So first support level to watch will be at 3,342, which is the 20-day moving average. And for today, I will tighten my short-term pivotal support level to 3,328. All right, so 3,328 also confluence with the 50-day moving average and very close to the medium-term ascending trend line from 31st of December 2024 low. So still maintain our intraday bullish bias on gold XAU/USD. Next intermediate resistance level to watch will be at 3,400. Above it, potentially see a retest on the 16th of June minor swing high area at 3,450. However, if price action do a bearish breakdown below 3,328, then that would negate the bullish tone to see another round of choppy corrective movement back towards the lower limit of the range at 3,293, 3,282, which is the minor swing low area of 9th of July. A breakdown below it sees the significant minor swing low of 30th of June coming in as the next intermediate support at 3,250. All right, so that's for gold XAU/USD. Still maintain our intraday bullish bias view within a medium-term sideways trend using a tightened short-term pivotal support at 3,328. All right, so lastly will be the West Texas crude oil. So for the West Texas crude oil, it can't actually break, but it actually slide down as intended. Then on Friday, it did a rebound, and the rebound can't break above our short-term pivotal resistance level at 69.15. So still no change, still using the 69.15 as my short-term pivotal resistance level as it continue to trade in this minor sideways range configuration that is in place since the low of 25th of June. So 69.15 pivotal resistance level to watch for today. Still maintain our intraday bearish bias view within this sideways range configuration. First support level to watch will be 67 figure level, which was last Friday minor swing low. All right, so this will be 67. A breakdown below 67 level takes us down lower towards the lower limit of this sideways range configuration for the next intermediate support level to come in at 66.10, followed by 65.20, which correspond to the 50-day moving average. Only a bullish breakout above 69.15 exposes 70.60. A breakout above 70.60 will see a much more pronounced corrective rebound taking shape, exposing the next intermediate resistance to come in at 63.60, which is the former minor swing low of 19th of June to 20th of June. Now turns into a pullback resistance. And if you do the Fibo retracement of that dramatic sell-off after that Israel-Iran ceasefire deal has been surfaced, that has surfaced out in the market previously, that also comprises with the golden ratio of 61.8% of that previous steep sell-off from 23 of June intraday high to the low of 25th of June intraday low. All right, so that covers the intraday technical outlook on all the broad-based cross asset classes. So before we go for today, let's have a quick look at the economic calendar. What are the key data to look out for in the European session? So during the European session, it will be a very quiet session. In fact, there is no key data out except for at 11 p.m., which is US timing already. That's the US session timing. We have a ECB official speaking. ECB Superlon will be speaking at 11 p.m. Singapore time. Then thereafter, it will be a rather quiet US session. All right, and we have key China data that is coming out on Tuesday to take a note of 15th of July before the start of our daily dose at 11 a.m. So at 10 a.m. Singapore time tomorrow, 15th of July, we have top tier 1 China data that is coming out. In fact, before that, 9:30 a.m., we have the housing price index. And at 10 a.m., we have a slew of another tier 1 China data, which is the Q2 GDP growth rate, industrial production, and retail sales. So this data could potentially impact the movement of the Hang Seng indices and as well as the Aussie dollar due to the Australia close trading relationship with China. Okay, so with that, that sum up the day dose of market insights for today. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.